It's a brand new week and the last Monday of 2019. I'm Haryanto Diman coming to you live from the Straits Times newsroom. You're watching The Big Story, where I'll have my newsroom colleagues to join me to discuss the hottest topics of the day and explain why it matters. Singtel and Grab are applying for a digital full bank license together, deepening their venture into the financial sector. A digital full bank license will allow both companies to serve retail customers, including taking deposits and lend money to companies. The joint venture will see ride-hailing firm Grab hold a 60% stake, while the Republic's largest telco will hold the remaining 40%. Both companies said the digital bank will aim to cater to the needs of digital-first customers and offer relevant products and services to consumers and enterprises. The Monetary Authority of Singapore announced in June that it will issue up to 5 new digital bank licenses to players who may not have an established record in banking. Singtel and Grab will know if their application has been approved by mid-next year. To discuss more on this joint venture, we have journalist Cheng Wei. Welcome, Cheng Wei.
Thank you, Haryan.
Cheng Wei, first up, if you could briefly explain to us, what is a digital full bank license?
Well, a digital full bank license issued by the MAS will actually allow Grab and Singtel, if approved, to basically take deposits from retail customers. They can also lend money to companies.
Okay.
Basically, we should think of them trying to be like the banks that we are familiar with, DBS, OCBC and UOB. The only difference here is that they will not actually have a physical place of business.
Okay.
So unlike the 3 local banks that have branches, this one will purely be a virtual bank.
Right, so it runs digitally online platform in that sense?
Yes, that's correct.
So with this joint venture, Cheng Wei, help us to understand how can it benefit consumers?
So there'll be more options for them for retail customers to decide where they want to put their money. We have heard that digital-only banks tend to offer better interest rates because of their lower operating costs.
Right.
Since they don't have to have physical places of business, they can perhaps offer customers even better interest rates. They are also supposed to provide more customizable and also more palatable options for customers. An example would be, say, there are certain British digital-only banks that allow their customers to split bills on their mobile phone right after they pay for an item. So that is something that perhaps more innovative ways of Grab and Singtel, if they get a license, for them to consider attracting customers.
Right. And Cheng Wei, of course, that being said, beneficial to the consumers, how then does it also benefit this joint venture to the 2 companies? Because earlier on, we had this little chat where you said that this joint venture could possibly also help in their financial position. Could you explain more on that?
So I think both Grab and Singtel, they are looking to new businesses to grow their profits. So for Grab, it's more popular for its ride-hailing and also its delivery services in Singapore. For it to be able to turn a bigger profit or better profit, or even make its way to profitability, it needs to look at the financial service sector, which in Singapore has been growing. As for Singtel, I think that its telco business has been hit with disruption and such. So it's also looking to grow in the financial services sector. So both companies actually have e-wallets already. So Grab has GrabPay and Singtel has Singtel Dash. So GrabPay and both are pretty popular in Singapore. So I think for them to venture into this deeper together, they are aiming to perhaps grow new lines of businesses that can help them.
Right. Definitely a very exciting times ahead in terms of the financial industry, right?
Yes.
Of course, it still remains to be seen as to whether the application will be approved. That will come next year. Right, in mid-2020. Well, thank you so much, Cheng Wei, for coming onto the show to explain to us a bit more about the joint venture. Now, to read more on this, you can head on to our website, straitstimes.com.